Hello and welcome to this lecture video. And so this lecture video, I'm going to start off by talking about reporting of non-influential investments. And specifically, I'm going to focus on trading securities. Okay. So the reporting for non-influential investments depends upon whether the security is a trading security, which we'll talk about in a second, a held to maturity HTM or held to maturity security, or AFS available for sale security. So let's talk about trading securities first. And so what do we mean by trading securities? They're debt and equity securities. So not just equity securities, not just stock, but also the bonds of another company, for example, that the company intends to actively manage and trade for profit. Okay? So they're trying to make money off of buying and selling these. They don't have an interest in holding these until maturity. They may buy them and then 1 month later intend to sell them for a short-term gain. Okay? So think almost like day trading. That's the way I kind of think about it. Sure, it's not all day trading. Could be over months, period. But the whole idea is you're trying to make money by buying low and selling high. Okay? Reported as current assets. Now, in terms of valuing and reporting our trading securities, the entire portfolio of the trading securities is reported at fair value. So how do we determine fair value? We can use quoted market values. We could use observable values from related assets or liabilities, or unobservable values from estimates or assumptions. In this case, what we're saying is just looking at the market value. Okay? So what we actually have to do is report this at fair value. So again, in the context of what we're looking at right here is market value. So what we actually have to do is make an adjustment from the cost of the portfolios. And then we're going to have an unrealized gain or loss from the change in the market value against the cost. So the market value goes up, we have an unrealized gain. The market value goes down, we have an unrealized loss. Okay? This unrealized gain or loss would show up as either revenue or expense, okay, on the income statement. So the expense would be the loss, the unrealized gain would be profit. Okay, move this down a little bit. And so what we're going to do is look at this example. So let's suppose that TechCom's portfolio of trading securities had a total cost of $11,500 and a fair value of $13,000, which again could have been the aggregate of all the stock prices that they had would be $13,000. The aggregate of all the stock prices that they had as investments classified as trading was $11,500 when they bought it. So you can see it increased by $1,500. Okay, that's the $1,500. The way I got that is taking, here's the market value. This is what it's trading for in the stock market. Think of it that way. This is what they paid for it. So it increased by $1,500. That is considered an unrealized gain, as opposed to a gain that would be realized. We would realize the gain once we sold it. But this is unrealized because we haven't sold it, but we do have to recognize that it has increased in value. So what we would do in terms of our journal entry on 12/31, we would do this at the end of the accounting period, which is on 12/31. We would debit our fair value adjustment trading for the difference between the market value or the fair value and then the cost, which is $1,500. That says fair value adjustment trading. Debit that, and then we would credit our unrealized gain income, which does show up on the income statement as additional revenue in this case for $1,500. That would be our journal entry. So if we turn the page over, again, this is what I was talking about. That unrealized gain or loss would be reported in the other revenues and gains. Okay. On the income statement, It's a temporary account that's going to be closed to income summary at the end of each accounting period. So we talked about closing entries in Chapter 4. So this would be closed to income summary. Fair value trading, on the other hand, this one, fair value trading, is a permanent account, which is going to adjust the reported value of our trading securities from its prior period fair value to this period's current fair value. Okay? The total cost of the trading securities is held in one account, and then the fair value we put into a separate account. That's why we don't just increase the cost right over here. We increase this fair value account to keep it separate. Okay? In terms of selling our trading securities, so when these individual trading securities are sold, the difference between the proceeds, which is the price minus and less our fees, and then the cost is recognized as our sale or gain. If we could have had some prior period fair value adjustments, that's not going to be used to compute our gain or loss from the sale of our trading securities. So when we look at our example, we assume TechCom sells trading securities that had a cost basis of $1,000. We sell it for $1,200 cash. Okay, so we come over here and we're going to debit cash, $1,200. We will then credit our short-term investments, trading, for the cost basis, which is when we initially bought those, right? And then what we have is not an unrealized gain, but a gain because we have sold it. The unrealized gain goes with the fair value market adjustments. Okay? Gain on the sale of short-term investments trading, which is going to be the difference between the cost basis and then how much cash we received, which would be our $200 right over there. Right? Continuing on, that gain is going to be reported in other revenues and gains on the income statement, and then a loss, if we sold it below cost, that would be the loss. So if you look at that prior page, it says we sold it for $1,200. The cost basis was $1,000. If we sold it for $800, then we would have a loss on the sale of our short-term investments, which would be another expense, and that would show up on the income statement. Okay. So in the future lecture videos, I'm going to talk about held for maturity securities and available for sale.